The number one question I still get all the time is, man, when are prices coming back down, and like what's going on with foreclosures? Well, today I got some news for y'all. It's been well over a year since mortgage forbearance plans began, and since then, from the stats that I'm looking at right now, it's estimated that 1.86 million borrowers have not made a mortgage payment since then. That's 3.5% of all mortgages active right now. And with these plans only being extended a few months and some of these programs ending in October, there's a few things that you need to know. First of all, banks, they don't like to foreclose on your home. They actually oftentimes lose money going through the foreclosure process. They have an incentive to work with you and help turn your loan back into a performing asset in their books. So with a little help and a little push from our government, mortgage companies began offering loan modifications. A loan modification is basically a change in the original terms of your loan. So this is usually a lengthening of the loan, or a change in interest rate, or a combination of both. The aim of these modifications is to provide relief by lowering your monthly payments at an average of 20 to 25%. So it would basically work like this. They will take your current balance and stretch it back out over 30 years at today's market interest rate, which a lot of times, and for a lot of people, it's lower than when they got their original loan. But what if you're only a few years into your current mortgage? How can you stretch 30-year loan back into a 30-year loan? Well, with the new COVID modifications, they are now offering 40-year loans. The announcement that came out was mostly talking about FHA, VA, USDA, and PIH loans. These are all loans that are government-backed loans. Now, if you don't have one of these, you can still apply for a modification through your lender. 40-year loan terms aren't anything new, but the fact that they are now going to be government-backed products might shake things up a little bit. On top of loan modifications, the CFPB just recently passed a new rule to help people in forbearance transition out of that into their next step. They are now having to give people 3 options before they begin the foreclosure process. The first option is to go ahead and resume making regular monthly payments and add their missed payments to the end of their loan. The second option is a loan modification that we just talked about, and the third option is to sell the home. Of course, there are qualifications and different requirements for everything I just mentioned, and I'll go ahead and post some articles in the caption below that I found helpful that have some more details. But your best option will always be to contact your current lender. They'll have the most updated information on your specific loan. Now that you know all this relief is coming, do you still see a wave of foreclosures? I know I don't. All I'm thinking about is that 40-year loan term. If that product becomes mainstream, I'll give y'all a hint. Demand's gonna shoot through the roof. But y'all, let me know what y'all think. Drop me a comment, and if there's anything else you want me to cover, please let me know. I'm always here for y'all.